again to Montenegro, everyone. We are here in Novi. We're looking over the beautiful bay. It's super hot, as is normal. You've got like tons of sun here, tons of great weather, tons of beautiful sea, beautiful mountains, etc. So we're going to talk today about an advantage that Montenegro currently has that attracts a bunch of people to the banking here. Now, whether you want to do that, that's a whole other conversation, and it's getting more challenging to do, but you can reach out to us and talk to us about that. The subject is automatic exchange of information and the Common Reporting Standard. So what happened was that back in 2009, bank secrecy around the world started to go down as the US broke UBS, and then in 2011 they broke Credit Suisse, and then in 2013, around then, 2012, 2013, they broke basically the entire Swiss banking system. And Andorra, Lebanon, Belgium, Austria, Philippines, a bunch of places that Luxembourg that formerly had bank secrecy have pretty much caved. Around that time, I think it was 2014, but I might be slightly off, the US brought in FACTA, the Foreign Account Tax Compliance Act, and basically made every foreign bank a tax agent for the IRS, forcing them to report information on all US persons abroad to the IRS automatically. So up till that point in time, the way that information exchange worked was you would do an information exchange request. So you'd have something called the Tax Information Exchange Agreement. It wasn't automatically exchanged. The country would have to suspect something, then they'd have to put in a specific request. Then based on that specific request, the other country would send information back. Often there weren't treaties in place there. Often the infrastructure and ability to do the reporting was really bad. Sometimes it still is in places like Vanuatu, etc. But that was the way that it worked. FATCA changed the game because FATCA made it automatic and added all sorts of paperwork. A bunch of banks didn't want anything to do with Americans for a while. It was a real hassle. And then shortly thereafter, we had what came in starting to be implemented in practice, I believe it was 2017, was the OECD led on what's called the Common Reporting Standard and automatic exchange of information. So this was basically FATCA for the rest of the world. Ironically, the US is one of the few countries that has not signed onto the Common Reporting Standard and automatic exchange of information. So basically the way this works is every year, these countries, through their banks, report back to the home country of the UBO, the ultimate beneficial owner, about the fact that they have an account there, what the balance is, etc., so that those local tax departments know that the person has money there, and as a result, it makes hiding money, which was quite popular back in the day, much, much harder. Okay, so this makes it way, way more likely that people will get caught. I was just reading the other day, apparently we've seen there's 25% drop in the amount of money that's been sent to offshore financial centers since the implementation of that. And it came in, country by country, so not every country's signed on. There's a few countries that haven't. And when they start reporting is also different for each different country. So it's, it's been a gradual process, but as time goes on, it's more and more of a big deal. So the question then becomes, okay, well, where, for some people, they want to continue to have their privacy, and they say, well, where can I go? And the truth is, almost every jurisdiction where you would want to have money is a part of it. So Singapore, Hong Kong, Dubai, everywhere in the EU, the EEA, Switzerland, Luxembourg, etc. They all do it. They all participate. So that's not going to help you. The US sort of can be a place. However, it depends on the FATCA agreements. There's two types. There's different FATCA agreements, basically, is the bottom line. And some have bilateral reporting and some don't. So you would need to look on a case-by-case basis to see what applies in whatever country you're in this situation. But it can be useful. The other place that's very popular that we talk a bunch about is Georgia. Georgia is not a part at this point in time. Montenegro is not a part. Armenia is not a part. There's a few different countries that are not a part of the CRS, the Automatic Exchange of Information. And so for some people who want to maintain their privacy, this is really attractive. Now, it doesn't mean that it's necessarily the best place to bank. My philosophy is always do things 100% legally, so that the thing is, over time, it's likely that these countries will have to sign on. Montenegro is aiming to be part of the EU, so in 5 to 10 years, they probably will, and that will probably come with it. If you pay attention to Georgia, when I meet with the bankers there, they tell me they're not sure when, but in a few years, they'll probably have to start participating. And that is going to be the global standard because they'll just shut banks that don't participate out of the financial system. So it's going to be the way that goes. However, In the meantime, you've got a few years that if you're willing to go and bank in some of these countries, you can potentially avoid it. Montenegro is one of those places, so it's something to check out. If you're interested or you want to understand more about how automatic exchange of information, FATCA, etc. work, reach out to us. Actually, for anything to do with banking, reach out to us, and we're happy to see how we can help you.